Alright guys, today we had a lot of crazy stuff come out on AMC and GameStop, especially for Friday. So without further ado, stay till the end of the video so you don't have to watch another update video here on YouTube. Hit the like, hit the subscribe button. It's free and it's all I ask. And of course, if you want to get yourselves free money, download Moomoo using my link, make a deposit to get 15 free stocks. Plus, join the Discord server. That link is under the Moomoo link. Let's get into the video. So both AMC and GameStop are magically just sitting right at max pain for this week. AMC currently at $5.43 and the max pain sitting at $5.50 and GameStop currently at $22.69 and the max pain at $22.50. Tell me your stock is rigged again without telling me your stock is rigged. It's clear as day this week AMC and GameStop were pressed down from having a major rip, and we have been expecting AMC to sell off into next week. I still stand by that. However, we just had a major put trade, $495,000 worth, sold with a strike price of $13 a share, expiring on May 19th, which is technically bullish on the stock. However, this could just be betting that AMC is going to have a solid earnings and rip after earnings on May 5th while giving themselves about 2 weeks extra. Touching on the options chain, just like that, we lost on the calls to puts, even though yesterday we were winning calls to puts. 14,000 calls expiring in the money compared to 41,000 puts now for AMC. And next week's options chain, a lot of people are betting bearish on the options chain. I also think AMC is going to have a slight sell-off come next week, but you guys let me know what you're betting in the comments down below. We have basically 430,000 call contracts versus 700,000 to 800,000 put contracts. So basically double on the put side of things for AMC. As for GameStop, we won on the options chain for GameStop, 7,000 calls compared to 3,000 puts expiring in the money this week. And a lot of people are betting bullish on GameStop over bearish next week. Compared to AMC, more people are bullish on GameStop than AMC coming into next week. And I kind of agree with them, and we'll talk about why when we get into the chart. Touching on the AMC Ortex numbers, 26.29% short interest, shares on loan at 191 million, utilization is maxed out, cost to borrow sitting at 357% for an average and 359% for a max. Now this dropped from all-time highs right around 980% for an average all the way down to 357%. So it could just be recalibrated, or there is somehow more shares issued on the market, which is something we're going to touch on in 1 second. As for APE, 5.74% short interest, shares on loan 31 million, utilization 67%, and again for about the 4th day in a row, cost to borrow not being reported on Ortex. Speaking of extra shares being dumped into the market, is this really a glitch at this point? Now it's 8 billion for the market cap on AMC. This is no glitch. It's been that way for days. First it was 7.7 billion, then 7.9. Now it's all the way up to 8 billion. This is not being readjusted to actual numbers. It's being readjusted to the shares that are being pumped into AMC. Overall, guys, you let me know what you think about this in the comments down below. Speaking of those extra shares, for the 2nd day in a row, AMC is back on the threshold securities list. I'm not going to hold it to high hopes, but it is definitely something to pay attention to. But again, we were on it for 30 plus days and nothing happened except Adam Aaron made a call and they took it off the list. So I'm not going to pay attention to this too much, but everything together, these shares stacking up, that's clearly not a glitch. Plus AMC getting put back on the threshold securities list, it just seems like there is a spring waiting to explode on top of the S&P 500 ripping to all-time highs. Because remember when it ran to 403, short sellers lost over 80 billion, and now it's sitting at 412, 413 a share. Now Benzinga, the National Enquirer of Finance, says AMC may be experiencing a short squeeze very, very soon. And according to ChatGPT, if you use NYSE ARCA on your limit orders, this will actually reflect actual supply and demand. You let me know if you guys place your limit orders doing this so that it actually reflects supply and demand. And if you don't agree with this, you let me know in the comments down below. Is this old news? Is this old technology? And does this not work anymore? Are they still routed to a non-lit exchange if you go through NYSE ARCA? Now here's something ironic. Gary Gensler has to answer to Congress for basically the SEC's lack of transparency, which is absolutely priceless because we know certain funds have to answer to Gary Gensler and the SEC for lack of transparency. And they're trying to come out with more and more transparency rules. This is basically regarding documents and fraud stuff that happened with SBF at FTX and the documents that Gary Gensler basically didn't show. So this is definitely just something ironic that I wanted to put out there. Now, Investor Turf tweeted, "We are witnessing the CEOs of top Wall Street firms call us every name under the sun. They're saying we don't know how to read a balance sheet, but most of their accounting books are completely fraudulent anyway. Citadel owns numerous subsidiary companies which buy and sell US treasuries to each other. Yes, that's right. The same company is trading with itself, and when they do the accounting for each subsidiary company, they don't disclose all the information. Neither the parent company nor the affiliate company is accounting for losses because the accounting is showing they're covering each other's books, which is fraud. They've been hiding transactions for many years. These CEOs and short sellers are calling us everything, but the one thing they are not doing is bringing the receipts to prove us wrong. The first ethical rule is if you see fraud and do not say fraud, you are a fraud. InvestorTurf has been calling out Citadel and many other funds over the past few weeks, so I definitely encourage you guys to go follow InvestorTurf over here on Twitter. They basically call out how Citadel and other funds are trading with themselves to clear their books and basically hide a ton of transactions, which we know that they have been doing over the past few years. Buying and holding is just causing the bubble to build up even more and make these institutions dig themselves a deeper and deeper hole. AMC is currently trading at $5.39, down about 1.5% on the day, trading very, very little volume. As I'm making this video, it's about 8.5 million in volume. We got a red candle, and even if I brought the drawings in, if you guys been keeping up with the channel, you know what I'm expecting. But on top of that, I wanted to bring in the Bollinger Band indicator to show you another validation on top of everything I said as to why AMC should have a slight sell-off next week, even if that's followed by a bounce. The Bollinger Bands. Anytime a stock really hard presses the Bollinger Bands for a breakout, it gets smacked back to the downside, and usually hard. You saw it back here, it tested it, it got smacked back down. Saw it back here, it tested it, got smacked back down. And something that's interesting is if I bring the drawings in, this was the same part of the cycle that it happened to. It broke out of this green box and it was testing hard on the Bollinger Bands before getting smacked back down. And every single time you see it, it can't break out of these and it gets smacked back down. The only basically time it broke out was the run up back in June of 2021 when we ran to about $70, which broke the algos. And if that happens, of course, everything is going to be invalidated. But for the short term, I see a rejection on AMC scaling back down come next week. As for GameStop, we talked about a lot more people betting bullish on GameStop compared to AMC for next week. It's trading at $22.75 and it's actually looking good. We had this little flag play out. It broke out of the flag. It based off of the flag. It based off of this bottom support trend line, and it's scaling to the upside, getting a little bit of a hammer candle, which looks like it is going to spring even higher, and it actually has more room to run within the Bollinger Bands than AMC. It actually has a decent amount of room to run, showing that it could come back up and test about $26 any day now for GameStop. So just watch that. GameStop might have a pop very soon. I still hold my puts because I'm down a lot on them, and I still see this gap fill at some point being filled down to $18.30. Of course, unless something like June of 2021 happens again, or January of 2021 happens again for GameStop and AMC. As for the S&P 500, we have been slightly bearish on the S&P 500, but I wanted to see if it would invalidate this double top, and as of right now, it is looking super bullish. We broke back above 412, and we're coming back down and basing off of 412 right now. If the SPY continues to rip off of this 412 bounce, that is going to be a beautiful thing to see for the SPY. I would watch 414 and then of course 420 for that breakout to the upside. I want to see the SPY break 420 to regain confidence that it's going back into a bull market rally for a next set of years, right? So that is my outlook on the SPY. Am I still temporarily bearish? Yes, until we get that break over 420, but right now, it is looking beautiful, coming back down, basing off of that 412. This is showing that you're not seeing that double top unless this is a fake breakout. But again, that candle closed above it, and we're trading at it right now, which is something nasty to see. Moving on, U.S. housing may see a 2008 style correction as 20% of the market could be mispriced. And the biggest banks in America reported earnings earlier today. JP Morgan revenue at $39.34 billion, estimated at $36.83. So JP Morgan beat on revenue. Earnings per share at $4.10, estimated $3.38. So they beat on EPS and revenue. But again, we just saw that these institutions are hiding things to make themselves look even better. So do you guys trust these earnings? Wells Fargo came out at $20.73 billion, estimated at $20.03 billion. Beat on revenue, and earnings per share at $1.23, estimated at $1.13. Beat on EPS as well. Citigroup revenue $21.45 billion, estimated at $19.94. Earnings per share $1.86, estimated at $1.65. So they are definitely, in my opinion, hiding some real numbers, trying to show that the banking crisis isn't bad. Because why all of a sudden, right, with everything we went through, are all three of these banks beating expectations for revenue and earnings per share? Some of them by a decent amount as well. You guys let me know what you think in the comments down below. Amazon just launched a ChatGPT rival called Bedrock, and I want to put a few stocks on your list that you might be able to play. We will talk further on them in Discord, so if you want to join that, the link's under the video. But BBIG investors are suing company executives in a new lawsuit. We've made videos on GTII in the past, but I want you to keep eyes on GTII as they might be in the process of forcing settlement by issuing this new special dividend that might come out very, very soon. So keep your eyes on ticker symbol GTII. Finally, Senator Tommy, who sits on the Senate Armed Service Committee, recently bought puts on ticker symbol TSM, Taiwan Semiconductor, which is Taiwan's largest company. He also bought large positions in Intel days before CHIPS ACT was signed, so this guy might have some insider trading. He just grabbed puts on ticker symbol TSM. So those are the 3 stocks that I wanted to throw on your list. Overall, hope that you guys enjoyed the video or found value out of the video. I love you all. Lottery Stocks out.